Over the last days, XLM, or the token of Stellar, has been on a run, and that's because of its integration with traditional finance. So the DTCC is going to tokenize traditional finance assets on the blockchain. Now on this channel you heard about this early. The first video was published when the price was still at 15 cents, then we doubled and now we're coming back down. So what's the most likely scenario going forward? By the way, if you haven't watched the first Stellar video on this channel and you're late to the party, feel free to subscribe over here. I try to publish videos as soon as momentum builds up. Now here's the announcement that started everything off. The DTCC, so the Depository Trust and Clearing Corporation, has plans to tokenize its assets on the Stellar blockchain. Now if you're deep into crypto, you might be aware of a platform called Dune.com. Now Dune tracks various on-chain metrics, and Stellar has its own account publishing the data that it wants you to see. This is the real world assets that are currently listed on Stellar. There's already strong positive momentum, even without the DTC assets. Here's the breakdown by custodian. So we've got Ondo Finance, we've got SPICO, that's growing the fastest, but we've also got ETFs from WisdomTree and from Templeton. Here's the breakdown by asset class. So we've got real estate, we've got private credit. US treasuries are of course the largest. This is usually stable coins that are backed by treasuries, but the growth drivers are active strategies and public credit. Stellar wants you to see how the US dollar volume of monthly transactions is going up over time. It wants you to buy into the growth narrative. But if you've watched the prior videos on Stellar on this channel, you know that this is not the full picture. Hi, my name is Gerhard. I've been actively trading crypto for the last 8 years. I hit my first million 3 years ago, and I did this through outperforming Bitcoin by on average 2% per month. More details are in the website down below. This is also where I explain the copy trading vaults. So this is where you can deposit your funds in order to automatically trade whatever I trade. Now here is my performance. That's my portfolio measured in BTC over time. Of course, not every single month I outperform Bitcoin, but on average, it's still 2%. And that is what counts. In the end, it's the long term. And in this video, I want to share the approaches that I personally use in order to now decide, should we buy Stellar? Should we potentially bet on falling prices? What's most likely going to happen from here? I don't pretend to have a crystal ball. I'm not right all the time, but I just shared that data in order to be transparent. What we've got over here, that's Stellar relative to the altcoin market. How much is it outperforming versus underperforming versus the rest? Now, clearly, this current rally has slowed down. Before, we only got corrections of 7%, or over here 9%, or over here 10%, but we never saw a correction of 25%. So something is fundamentally shifting. Some people are already taking profit after that announcement. From 15 cents up to 30, down to 23. Now how much upside potential is there really? What we've got over here, that's the market cap of Stellar over time. And we can look at different scenarios here. The first scenario is that there is still quite a bit of upside, potentially a 2x from here. We are at 8 billion of market cap. We could potentially go to 16. That would bring the price of Stellar to close to 50 cents per token. But then there's an alternative story. Let's say we are peaking out, similar to what happened in 2021. We subsequently sold off, got a bounce, and then we didn't go all the way up to the 15 billion. We just stopped midway at 10 billion and then came back down. That is another possibility. We don't necessarily have to realize that potential. The fundamental question is always about risk versus reward. XLM tends to rally very quickly and then subsequently bleeds very slowly. It goes up much faster than it goes down. And currently we are in a phase of a lot of excitement, of a very quick appreciation. And while this might just be a hiccup compared to November of 2024, when we had another rally, this could also just be the end and the turnaround. So we are now working against time. If Stellar cannot make another run in the next 2 or 3 days, then probably the momentum has died down again. Overall, the crypto market is still very hostile. Especially decentralized finance doesn't look that pretty. This here is the DeFi total value locked across all blockchains and its entire history. We had our DeFi summer in 2021 with its subsequent implosion of Terra Luna and FTX. Then the turnaround, and we hit very similar levels to 2021 again, but currently the momentum is clearly still bearish. Decentralized finance is not expanding at the moment. The total value locked of the Stellar chain though is expanding. So Stellar is an outlier in all of crypto. DeFi in total has 80 billion of TVL. Stellar has roughly 250 million. So it's a drop in the bucket. Where does all of this capital increase come from? It comes mainly from one single application, and that is SPICO. SPICO itself is growing very consistently, but SPICO is not exclusive to Stellar. SPICO is also on Arbitrum and on Polygon and on Ethereum. And so SPICO is not the killer app. The trading that we see currently is all still in anticipation of the DTC listed assets. Now even news like this, where we don't yet have the adoption on-chain, can bring a bit of excitement. What we've got over here, that's the decentralized exchange trading volume on the Stellar chain over time. Again, this comes in waves and then subsequently dies down. There is correlation between trading volume and price as well. Now in crypto, we always have to look at two distinct markets. We've got the spot market and we've got the perpetual futures market. And the ratio of the trading volume between the two tells us how hot an asset is, how heated it is, how much attention there currently is. So we've got 130 million of trading volume on the spot market in the last 24 hours. On the perp market, we have 780 million roughly. So 6 times more trading volume on the perpetual futures market. This is definitely elevated. So there is leverage in the asset now. And you'll see this in the open interest statistics as well. And here are the numbers. So this is how many bets are currently been made on XLM, measured in US dollars. This spikes up and then comes down again. So attention comes to the asset, then goes away again. That's a repetitive pattern. Now why does this matter? It matters because open interest is highly correlated to the price as well. Once there are less bets on the price, then the spot price itself tends to go down as well. And so the fundamental question here is, how much higher can open interest go? Is this current level of 350 million already too elevated? And are we coming back down again? Or is open interest going to double again and potentially also pushing the spot price with it? What I always like to look at is trading volume, because it also has correlation with the price. Now trading volume is a very quick indicator. It's currently elevated and it does not yet go down. So that is hinting towards a potential continuation of the rally. Many traders that were betting on falling prices, so the shorts, they got liquidated. But interestingly enough, also some longs got liquidated at the same time. This volatility is not pretty for either side, be it long or short. Active position management and especially risk management is essential. So fundamentally, we have to ask ourselves, if the potential reward, if the rally continues, is another 2x, so a market cap of Stellar around 15 or 16 billion, is that potential worth the risk? Historically, the air got really thin at around 15 billion and now we are close to 8. But what is the risk in case the momentum turns around? The risk is very, very high, minus 80%. In other words, if this rally does not continue as it did in November of 2024, if we just go sideways, we're probably going to fall for much, much longer. And then it's important to have a proper stop loss in place. Or alternatively, we just wait and see. And if we continue to fall, we could also enter a short position. That's actually my preferred way of trading. So you've probably seen this in the prior videos on Stellar on this channel. I've run the backtest, how to ideally time Stellar, and that is via the 8-day and 2-day simple moving average. When we get a def cross of those two moving averages, so if the 2-day SMA falls below the 8-day SMA, that's when I consider to enter a short position. This tended to work very well in the past and it's probably going to continue to work well in the future. Right? For example, over here, that was in July 2025. After a rally, once we got the def cross, we saw Stellar rather bleeding down. Buying the asset right now with a long-term time horizon is probably very risky. People always say that past performance is no indication of future performance. But when we actually run the numbers, when we look at the autocorrelation, so how did a past performance time window in the last 1 or 2 years correlate with the subsequent 1 or 2 years, we actually get quite tight correlations. In other words, past performance in a way does predict future performance. Have a look at this backtest over here, the return autocorrelation. We are looking at Stellar relative to the rest of the altcoin market, and have a look at this chart. On the x-axis, we've got the past performance window, so that's now 2 years and 21 weeks. On the y-axis, we've got the forward-looking 2 years and 21 weeks. So we're just looking at the past time window, and then we roll this over the entire price history and check how did the past influence the future. And clearly, there is negative correlation here. When we had a lot of positive performance of Stellar in the past, we tended to have much less performance going forward, and vice versa. When Stellar crashed, then we tended to have better performance going forward. Currently, we are over here, so the forward-looking performance does not look very great. Those are log returns, by the way. So we have to convert this into linear returns in a minute. Why am I taking 2 years and 21 weeks for both of those time windows? It's because that's where the R squared is the highest. That's where we get the best prediction of future returns. And so here are the numbers. Based on that autocorrelation, over the next 2.5 years roughly, we should have on average a 47% underperformance from here. So 1 year from now, Stellar should be underperforming the rest of the altcoin market by 50% roughly. We cut it in half. We wait another year, we cut it in half again. So we are left with 25%. We do this over 2.5 years. So in the end, we are down by 78%. So that's what the autocorrelation is suggesting. Now this is just this line here, right? There are obviously data points outside of that line, and this is by no means a perfect model, but it does give us some food for thought if it really makes sense to hold XLM that long term. It only makes sense if you believe that we'll actually get adoption of those tokenized assets on the DTC. And I think we don't necessarily have to speculate on that adoption. Once we do see the first trades happening, then we can measure the numbers, and probably by that time the market will still not have 100% adjusted to that reality. Very often there is a lag. People don't really follow the numbers that closely. When Stellar sees its adoption numbers really going up, that's when I personally want to buy. I don't want to buy just based on speculation that we might get adoption. Creating the product is normally not the problem. Getting the adoption of that product is normally the hard part. And so yeah, as mentioned, I am not buying Stellar right now. I am waiting for the dev cross. And I will get an automated trading message for that again, as we always do. For example, here, the Luna token, we opened a short over here, we closed it over here. That's the notifications we are getting in Telegram. So again, we had a massive rally, then we got our dev cross, that's when we started the short. And then we closed that position once we got the golden cross. And that's then a clean gain of 14.6% without any leverage. And so every single one of my trades that I've been doing in the last 2 years is 100% documented over here with its individual trade messages in Telegram. And I've executed every one of those trades. This is not just fantasy numbers. This is a real track record. And this is then how that looks like over time. On average, I make 5.2% per trade. The number of winning trades and losing trades is almost equal, but the winners are larger than the losers. That's where the gain is coming from. The positions that are currently open are of course not shared here on YouTube. That's available for the premium members. If you don't want to manually copy trade, by the way, you can also do automatic copy trading, but that's for the annual subscribers. So that's over here. Last year we achieved 44% annualized. This year we plan to get the same. Again, we are simply scanning for discrepancies in the market. When we've got short-term manipulation or too much leverage in an asset, we just position ourselves against that. And that's what generates the long-term wins. I don't know any other voice in the crypto space that's willing to share their track record that openly. But I do it for 2 reasons. First of all, it's for transparency and for building trust, because there's too many people that say they are winning players while in fact they are not. But also it gives a realistic picture of what's actually achievable. So those 5.2%, that's without leverage, and that's with an average holding duration of 27 days per trade. That's, for example, the reason why you don't want to get in and out of an asset 100 times per day, because it simply builds up so many trading fees. If you pay 0.05% for a futures trade, or let's say even 0.2% for a spot trade, and you do this when you enter, and you do this when you exit, then if your market edge is not large enough, you're just generating fees. And so having a somewhat reasonable holding duration per trade is very important. You don't want to overtrade, but you also don't want to undertrade, as in you want to still be following the current momentum. If it is your first time over here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you on Premium. There's also a 7-day money back guarantee for Premium. In case you don't like it, just message me within the first 7 days and I will refund you. No questions asked. So there's really no risk for you. Thanks for watching and see you next time. Cheers.